The Australian median property price has risen for the 16th month in a row, and the size of the gain last month was the biggest since October of last year. But that does not mean that property prices are rising everywhere. That's why today I'm going to do a deep dive into what's going on around the country. I'll look at our various capital city markets plus our regional markets. I'll even look at why property prices are rising in some areas but not in others. Let's dive in. Hello, it's Nero here, and if you're new to my channel, hit that subscribe button because I talk about all things related to the Australian property market and the economy. Here we have data from CoreLogic showing how much property prices have risen both last month and in the last 12 months. Now what you can see if we look at the furthest right hand side is that last month property prices rose 0.8% across the country, for the year 8.3%. If we look at Sydney last month, property prices rose 0.6%, and for the year they're up 7.4%. Now remember, Sydney is our most expensive market and many people expected Sydney property prices to drop, and they did. And I'll show you another chart in just a moment that shows you the impact of what that price fall actually was. But let's keep going through our various markets. Melbourne last month, 0.1% growth. For the year, property prices are only up 1.8%. So the Melbourne market is very weak right now. It's not crashing, but property price growth in Melbourne right now is lower than inflation. Then we look at Brisbane last month, 1.4% growth, and for the year, property prices are up 16.3%. Adelaide property prices rose 1.8% last month. For the year, they're up 14.4%. Perth, the strongest capital city market right now, property prices rose 2% last month. For the year, they're up 22%. Then Hobart, property prices dropped last month by 0.5%. For the year, they're still down 0.1%. It's a flat market. Darwin, property prices dropped 0.3%, but for the year, they're up 3.5%. And Canberra, our nation's capital, last month, property prices rose 0.5%, but for the year, only 2%. Similar to Melbourne, it's a market that's very weak. Property prices are growing less than inflation. But why? Why are property prices growing by different rates in different markets? Well, the next chart starts to paint a picture. Here we have data from CoreLogic looking at the total number of listings, which is a total number of properties available for sale relative to the previous 5-year average. And what you can see is that there are only 2 of our capital cities where listings are up. Melbourne is up 10.8%, Hobart is up 40.8%. And that translates into the price growth we saw last month, with Melbourne and Hobart being 2 of our weakest markets. But what about Darwin? For example, as you can see here, Darwin property price growth was negative last month, but listings are down 19.1%. Well, it's because I'm only looking at supply here, the number of properties that are coming onto the market. So just because right now in Darwin there might be fewer properties available for sale relative to the 5-year average, doesn't necessarily mean that property prices will rise if there isn't enough demand, if there aren't enough buyers in the Darwin market. So we need to look at both, but clearly just looking at this shows us what's driving the differences in terms of property price performance. You can see, for example, Perth property price growth is up 2% for the month. It's on track for well over 20% this year. And look at the listings. Listings are down 44.5% relative to the 5-year average. Look at Adelaide and Brisbane, our other 2 best performing capital city markets. Again, listings are down over 30% in Brisbane and over 40% in Adelaide relative to the 5-year average. And we know in those markets, population growth is significant. So on a macro level, we do have a major issue with an undersupply of properties. This was produced by AMP Chief Economist Shane Oliver. And what it shows you is the green line, which is tracking undersupply. the number of properties that we're short in this country. And what it shows you is that we are about to hit an undersupply of housing of 200,000 dwellings on a nationwide level. And wherever this undersupply is the biggest, that's where property prices are likely to grow the most. But then you have to ask yourself, what about affordability? I mean, we know affordability in Australia right now is the lowest it's ever been. So then doesn't that mean property prices need to fall? Will they ever fall? Well, the answer is that property prices have already fallen recently and they're now on their way back up. For example, what you can see here is that the Sydney dwelling values over the past 5 years with data provided by CoreLogic has fallen. It reached a peak in January of 2022, then prices started to fall away because of the fear around interest rates rising. And yet, look how far it fell. Yes, it fell by 12.4%, but it still never fell below $1 million. So the lowest that the median house price in Sydney has reached in the last 5 years has been just over $1 million. And then from the start of 2023, property prices started to rise. And we see this similar sort of situation across all our different markets. Some of the markets slowed, some of them fell, but essentially from either late 2022 or early 2023, property prices started to rise because the shortfall in available properties became the more dominant factor, as you can see in this next chart, which looks at the different quartiles of property price performance. So in other words, this data from CoreLogic is comparing the cheaper properties in many of our markets versus the more expensive quarter of properties in those markets. And what you can see is that the orange line, which is tracking the cheaper 25% of properties in each of these markets, that's actually growing faster than the more expensive properties. So therefore, as an investor, you can get into investment property in good quality areas for as little as $600,000. It's no wonder then that so many investors are jumping in right now. They're seeing that property prices are rising. They're seeing that rents are rising. They see the expectation that interest rates are expected to fall. But is it worth jumping into the property market, especially with interest rates being the highest they've been at for 12 years? Well, here I have the median property prices across our major capital cities and their current levels of growth. So let's say, for example, we look at Brisbane. Median dwelling price is $843,000. Last month it grew at 1.4%. Assuming that stays consistent and doesn't actually increase, which I suspect it might, that means that next month property prices would rise by 1.4%, which is roughly $12,000. Let's look at Adelaide, for example, where the median property price is $750,000. Using some round numbers here, growth rates are 1.8%. So that means that if that rate was to continue, next month property prices would rise by about $13,000. That's what you would miss out on by not jumping into the market. And it's not just capital cities. There have been multiple regional markets where property prices have jumped around 20% in the last 12 months. And I expect property prices in many regional areas to continue to grow. Here's why. City dwellers are returning to the regions. Regional relocations surged in the first quarter of this year, according to Commonwealth Bank and the Regional Australia Institute's Regional Movers Index. While fewer people moved to the regions after pandemic lockdowns were lifted, the number of people relocating from a capital to a regional area is now sitting 20% higher than prior to the pandemic, the report found. And in many of these regional locations, they don't have the resources to be able to build enough properties for the number of people who are moving there. So what's the takeaway message here? The median house price in Australia is going to continue to rise month on month, but that does not mean that property prices will rise everywhere. You need to do your due diligence, and if you want help with that, check out the link in the description below to get totally for free the digital version and audio version of my book. I truly believe that there's some major opportunities for capital growth coming from 2024 until about 2027. And if you can do your due diligence and find those right places, you could really set yourself up for the future. But if you hang around and wait too long, you might just find yourself missing out. I'll see you next time.